Welcome to the Deep Dive, where we decipher earnings calls for experienced investors like you. Today, we're tackling SQM's second quarter 2025 earnings call. That's the big specialty chemical player. Our mission here is to cut through what looked like, well, a pretty tough quarter on the surface. We want to see if management really laid out a clear path forward, despite some significant headwinds.
Indeed. Those headline numbers, they probably cause a bit of a stir initially, but when you dig into the actual discussion, you get a much more nuanced picture. We'll be looking closely at the financials, breaking down what management's actually saying about the future, and really trying to figure out how SQM's moves fit into the bigger picture for things like lithium and iodine too. Are they just riding out the storm or actively positioning?
Right, let's jump straight into those numbers then, because on paper they look challenging. SQM reported GAAP EPS of 31 cents. That significantly missed the consensus, which was 52 cents?
Yeah, a big miss there. And revenue also fell short. Came in at about $1,042 million against expectations of $1,080 million. So that's nearly a 20% drop year over year, 19.4 to be exact.
And adjusted EBITDA?
That stood at $307.9 million. So the margin was 29.5%. Which is, noticeably down from 33% this time last year.
Okay, so those figures definitely paint that challenging picture you mentioned. Primarily driven by lower lithium prices, I assume.
That's the main story, yes.
Right.
Lower lithium prices were the big weight, and the market reaction was pretty immediate. Shares opened down, $42.66, coming off $45 close.
Right. But what's interesting, and maybe what caught some people's eye.
Exactly. Despite that initial drop, the stock actually showed some resilience. It clawed back some losses over the next few sessions. And that's not just noise. For experienced investors, that suggests something deeper. Maybe an underlying belief that, okay, maybe the worst is over.
So if lithium was the main drag, could you break that down a bit more? How bad was the hit to margins in that segment?
Sure. So the lithium segment was really grappling with what management called lower lithium prices compared to earlier this year. Mm-hmm. And it wasn't just a small dip. The lithium and derivatives part of the business recorded an adjusted gross margin of only about 21% for the quarter.
21%. That's quite low compared to what we've seen historically from them in lithium, right?
It really is. It's a stark reminder of how sensitive that part of the business is to pricing. And for you listening, it really highlights why understanding SQM's cost position matters so much. 21% suggests they're still making money, but it's far from peak levels. Shows you the impact of that recent oversupply.
Okay, but SQM isn't just lithium. That diversification is key. Did those other segments step up? Did they provide that buffer?
They absolutely did. And this is where that diversified strategy really proves its worth. While lithium was under pressure, the iodine and derivatives segment was, a powerhouse. It hit an impressive adjusted gross margin of around 57%. 57%. Oh. And get this, it contributed over 50% of the total company gross profit in Q2.
That's incredible. One segment carrying that much weight.
It really is. And then you had the specialty plant nutrition, the SPN business. That also delivered stable, solid results. Yep. Good demand there. So that balance, it's not just a nice to have, it's strategic. It lets them keep investing, keep things moving, even when lithium hits a rough patch, sets them apart from the pure plays.
That stability from iodine is clearly crucial. Okay, let's pivot from the Q2 results to the outlook. What was the feeling for management, especially on lithium? Are they genuinely seeing things turn around, or is it just hopeful talk?
They sounded, I'd say, cautiously constructive. They talked about seeing a clear inflection point for lithium pricing and volume starting in Q3. The CEO, Ricardo Ramos, specifically mentioned lithium prices improving in the past few weeks compared to the level observed in May and June, so signaling a potential bottom.
And the demand side?
Also positive signals there. They noted strong demand growth coming from EV and BESS, particularly in China. But interestingly, they also said Europe has surprised us with a stronger than expected demand growth.
So for investors, it's not just about price maybe ticking up. It's that the core demand drivers, EVs, battery storage, they seem to be kicking back in. The long-term story looks intact.
That's definitely encouraging, especially the Europe comment. So with this expected recovery, what about actual volumes? Did they give specific guidance? Are we expecting a big ramp up in the second half?
Yes, they did give some specifics. For their main operations in Chile, the Atacama, they expect lithium sales volumes to increase by at least 10% compared to 2024 overall. And crucially, they project Q3 sales to be at least 10% higher than Q2. That implies acceleration.
Okay, 10% up on Q2 for Q3 and internationally. Mark Fones, who heads up their International Lithium division, updated the guidance. He's now guiding to approximately 20,000 metric tons of LCE, lithium carbonate equivalent, for the full calendar year 2025. And he stressed that those sales will be heavily weighted towards the second half, mostly coming from spodumene concentrate initially.
Right, that second half weighting is important. Suggests results should improve as the year goes on, assuming prices cooperate too.
Exactly. Points towards maybe a better supply-demand balance starting to emerge.
Now, you mentioned international operations. There was a big milestone achieved there, wasn't there? The Kwinana Refinery in Australia. Tell us about that.
Yes, huge news. In July, their joint venture there, Covalent Lithium, successfully produced its first battery-grade lithium hydroxide, and they made a point of saying it was on spec, on budget, and on time.
Which isn't always the case with these complex refinery projects.
Not at all. It's notoriously difficult. So hitting those targets, especially achieving battery-grade purity right off the bat, that's a major win. The facility is now ramping up towards its 50,000 tons per year capacity, half of which is SQM's share. For you, the investor, this really de-risks their move into higher value hydroxide. It shows strong execution.
Did they say why they thought they were successful where others have stumbled?
Mark Fones gave some insight. He mentioned their very methodical approach, said they only started construction of the refinery when we had 80% of engineering in detailed design. That kind of rigorous planning, it might be the key to avoiding those common ramp-up headaches.
That makes sense. Discipline and execution. What about the related Mount Holland expansion in Australia? Is that also full steam ahead?
A bit more cautious there. The decision on expanding Mount Holland, they said, will not be taken during this year, 2025. They'll review it periodically in 2026, looking at the market, engineering, approvals, all that.
So tap the brakes slightly on that one. Focus on ramping Kwinana first.
Seems like it. A prudent approach, maybe. Make sure the current asset is humming before committing big capital in a market that's still finding its feet.
Okay, let's circle back to iodine. Given how strong it was, carrying so much profit,
Yeah.
what's the outlook? Can they keep that up? And are they tackling the supply tightness?
Right. The iodine outlook is interesting. Pablo Eneas, who runs that division, noted demand growth is expected to be pretty modest in 2025, less than 1%. But, and this is key, he stressed, it's not because demand is weak, it's because supply across the market is tight. Underlying demand, especially for things like X-ray contrast media, is actually robust.
So they could sell more if they had it.
Essentially, yes. And they're working on that. They're investing in new capacity. He mentioned a new greenfield project aiming to add 1,500 metric tons of iodine capacity. Plus, they're expanding their existing seawater pipeline infrastructure. So for investors, that's sustained high margin plus strategic investment in growth. It just highlights how vital that iodine business is for SQM's overall stability and profitability.
Okay, last major piece. The big partnerships, particularly Codelco in Chile. That's been hanging over things for a while. What's the latest?
The update there was a positive. Management, including Ricardo Ramos, confirmed the process with Codelco is moving along well and moving quickly. They expect to finalize the main agreement for the Salar de Atacama operations during September, maybe October, but it's going to be ready during this year anyway.
So clarity expected very soon. What about approvals? Any hurdles there?
Regulatory approvals are underway, including, importantly, from Chinese authorities. They sounded optimistic about getting a positive outcome on that front in the coming weeks. Finalizing this whole Codelco deal is obviously a huge deal for investors. It removes a major uncertainty around their biggest lithium asset.
And looking even further out, the Salar Futuro project with Codelco.
That's much longer term. Environmental study submission planned for the first half of 2026. They're optimistically hoping for project approval around early 2030, with the big spending not really kicking in until the second half of 2030 through 2033.
So way down the road for actual impact.
Exactly. It sketches out a long-term pipeline, but no major financial drain anytime soon. On overall CapEx, the CFO, Geraldo Janes, mentioned they're expecting about $1 billion per year for 2025 through 2027, mostly for growth. More details expected on the Q3 call.
Okay, so stepping back a bit. We've heard SQM's view, but what's the wider lithium sector looking like right now? Are we really seeing that recovery take hold?
Yeah, the broader backdrop does seem to be improving. We've definitely seen lithium spot prices firming up through August. That aligns with what SQM management was saying about expecting a lift in Q3 after that Q2 trough, which, seem tied to oversupply and destocking.
And demand fundamentals.
Still look strong long-term. EVs, battery storage, that global growth story hasn't really changed. Analysts generally agree demand will stay robust, even if there's some near-term supply adjustment happening. Paulo Fernandez from SQM made an interesting point on the call about the cost curve. He basically argued that current lithium prices, even with the recent increases, are still, in his words, below what the balance would be between the supply-demand.
Meaning prices might still need to go higher longer term.
That's the implication, that current levels might not be enough to incentivize all the new supply needed down the road. If he's right, that could be quite positive for established low-cost producers like SQM. The big challenge for the whole industry, though, remains bringing these complex new projects online without major delays or cost blowouts. That's where SQM's Kwinana success stands out.
Okay, so we've covered the results, the strategy, the industry view. Let's try and tie this all together. What does this mean for you, the experienced investor, looking at SQM right now? How do you synthesize these moving parts?
Well, look, the Q2 numbers absolutely show SQM isn't immune to commodity cycles. Lithium volatility is real, that's clear. But, and it's a big but, the strength in iodine and specialty nutrients isn't just a footnote. It's a crucial earnings buffer. It provides real stability. And that successful Kwinana commissioning, don't underestimate that. It's not just an operational update. It's proof they can execute on complex downstream projects that significantly de-risks their path to higher value lithium hydroxide.
Right, it feels like the story around SQM is shifting, doesn't it?
Yeah.
Moving past just Q2 was tough to something more nuanced.
Precisely. You've got this positive outlook for lithium volumes and potentially prices in the second half. You've got the ongoing strength and investment in iodine. It suggests a potential pivot from, let's call it, trough earnings towards really benefiting from any price recovery through operational leverage. So for investors, they could be well positioned to capture upside as the lithium market finds its balance.
And key things to watch going forward.
Definitely the Q3 results need to see if that lithium recovery actually materializes in the numbers. Keep an eye on Kwinana ramp-up milestones. Continued smooth execution there is vital. And obviously the final word on the Codelco deal, including those Chinese approvals, getting that finalized would be a major catalyst.
Okay, makes sense. Now let's move to our segment for those seasoned investors who enjoy a bit of calculated speculation. This is strictly a thought experiment, not financial advice.
Absolutely not financial advice. But given the firming lithium prices we've seen and SQM's demonstrated execution, particularly at Kwinana, one could hypothetically consider a long position in SQM itself, betting on those company-specific factors driving performance. But lithium is volatile. The whole sector moves together sometimes. So to manage that risk, you might also consider hedging, perhaps by selling some out-of-the-money calls on a broad battery materials ETF, something like LIT maybe?
So the idea isn't just being long lithium, but being long SQM relative to the broader sector. A pair trade concept almost?
Exactly. You're betting that SQM's specific strengths, Kwinana working well, Atacama volumes picking up, iodine holding strong, will lead it to outperform the general lithium pack. If the whole sector suddenly tanks, being short those LIT calls, theoretically, could cushion some of the blow. It lets you participate in SQM's potential upside from their execution while acknowledging the sector risk. A calculated bet on SQM's alpha, you would say, within this dynamic market.
Interesting angle. Okay, so to wrap up our deep dive today, SQM's Q2 was definitely hit by lithium prices, no doubt. But management sees encouraging signs for Q3 recovery in both volumes and pricing. Their diversified model, especially that powerhouse iodine business, provides real stability. And Kwinana hitting its marks is a significant win for their hydroxide strategy.
Yeah, the road ahead is about managing those cycles, executing on the expansions like they did with Kwinana Phase 1, and getting that Codelco partnership across the line. They seem well set to benefit from the long-term lithium growth story, especially with those other strong profit pillars supporting them. The key question now is how quickly and effectively they translate these strategic moves into sustained financial gains.
As always, remember this analysis is purely informational, definitely not financial advice. Please do your own thorough research. Thanks for joining us for this deep dive into SQM. We always appreciate your feedback.